Hi, and welcome to the channel. Today, what I'm going to do, first off, today's date is March or May, sorry, May the 10th, and it's 5:32 p.m. Eastern Standard Time. Um, Toronto, New York, that area. Now, it's been hard, and I haven't posted for a while, but that has a lot more to do with, it's just it's hard. People aren't watching, nobody's subscribing because nobody's actually seeing the videos yet. So it's kind of hard for me to do this specific video that I've wanted to do for a while. I was hoping I would start and have a few subs and stuff like that to start and really release some big time secrets of the markets that people you look at it constantly, but you just don't see it. So this is a perspective that and something that I've come across been at this for like 40 freaking years, but the way people look at things, you change your perspective just that little bit, and something becomes so very obvious. And today I'm going to show you something that is extremely obvious. So, to start, we all know what you're looking at is the 5 minute chart. You can see that right up here. We're looking at a 5 minute chart right here, and we're looking at gold, Forex gold on the 5 minute chart. So we all know that markets price goes up, price goes down, price goes sideways. That's it. It doesn't do anything other than that. Now, there are factors to that fact, or to those facts, okay? Because you got to take each one into consideration. But for the majority and the chart that you're looking at right here, right now, you can see, we have down movement, we have up movement, we have down, up, bit of sideways, down, up, bit more sideways, down, up. So this is what we're dealing with, and we deal with this as traders all the freaking time. Now, a lot of people will tell you, and I've seen video after video after video, of always marking your highs and chasing your lows and this and that, because when you're on a buy, you want to buy low and sell high. And a lot of retail traders get into this where they'll buy up in this area, and then the price gets pushed back down here, and they go, "Oh, geez, man, I got in too late because I was waiting for a true, good, clear signal to get into a trade or like a buy." So you end up buying up at the top, and then they just dump it on you, and you get scared and you get out. A lot of traders do that, unfortunately. So by my observations and perspective that I took, came across something that will help kind of alleviate that in a sense. But what I want to do is to show you that there is a turning point. There's always a turning point to the change in the fact that price goes up, price goes down, price moves sideways. There's facts based in price when the transition from one to another is taking place. So, um, actually, I kind of need and I've already got some done up, but I'm gonna do up a couple more here. I don't really care how long this video takes. It's probably going to take me quite a while to explain this, though it is very simplistic. Very, very simplistic. What I want to do is I want to show you example after example after example. This isn't just me showing you one example and then that's it. And there is nothing else, right? So I'm going to show you again and again and again how this works. Okay. So what I need, I've chosen my straight line tool right here, and we're just going to draw a perfectly as straight a line as we can. So over in the far right there, you can see 47.35.967. So I want a fairly long line, and you can see that it has set that point that I just put down. We're going to draw a nice one. And I want to come back to that 4735967. And there we go. So now what I want you to do is you're going to click on that and you're going to clone that one because we need two of these lines. Okay. And then this one here on your color one, you can mark it green. Choose red and green for the most part. If you want to do white and blue, you want to do whatever, right? Just make sure you have two different colors. Now, what I want to show you here is that this is based on what I call my lowest high and my highest low, because there is a point when price is moving up and it's starting to max out at its point, that there is a low point set that becomes the transition point or a point in which you can actually see quite clearly, as long as you have it marked out with a line. It starts and shows you when price changes. Does it always change right at that price point? No, but it is a price point that gives you an idea of price changing. Okay. So what I need to do first and foremost is to point out exactly what a individual candle high point actually is. And what a high actually is a candle that has the highest point reached during its time frame. It would be greater than either candle on each side of it, the candle prior to it and the candle after it. Okay, so I'm going to use this little circle tool and then we'll just circle a few here. So high, we obviously have this high right here. There's another high right here. Okay, so you can easily see that these high points are, they really stand out like sore thumbs, right? So when you have a high, so now let's do the low first, and then I'll get into another little freaking. So the same, it's true for lows, where you have a low right here. That one right there is lower than either candle on either side of it. And then we have another low right over here. It's lower than either candle on either side. Now, and as you can see here, these candles here just kind of drop off. All right, I can get rid of the crosshair. Let me see what I can do here. Let's just do the arrow bit. Yeah, we'll get rid of the crosshair and that'll make things a little easier. Okay. So these ones here, you can see that there's just a continuational um, lower price point established within the each 5 minute candle, right? No real low established until we get right down here. And then we have a low point. So we have a low point set right there, right? And then we have another low point here. We have a slow low point here. And right now, the way that we read these, the proper way to read these, and people always look at higher highs, you know. That's not the way to do it because it's like the floor drops out from underneath you. What I always thought about was like the staircase of things moving up, and a staircase needs support underneath of it. So I started looking at things from that different perspective as while price was going up, I wanted to look and see underneath. I wanted to see where that support was. And I'm not talking about like support in this factor here where you have support, you know, across this one for a short time frame, you know, this being a support factor. That's not what I'm talking about. I'm talking like an actual staircase bracing, right? I was just, you know, looking at it in a different way one day. So as price moves up, and I want to see the best place to actually start here. I think I want to do here, and I don't want to clear that off. So I'm going to take these out one at a time, kind of a pain in the butt, but I think you should be able to understand the high point candle and a low point candle, because that is really quintessential to being able to understand this here. So what I want to do is I want to mark my lows with the red. So I was going to do a playback, but I don't think so. I think what I'm going to do is just show you how it kind of works, where you have that one low situated right here, and then you have a little bit of a higher low. So what this is the highest low reached and the lowest high reached. That's what our goal is looking for. So as price starts moving up, we're constantly always moving this up, right? We move it up to another low. So then we have another low here, right? And then we have, nope, 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 no, nope. Now we have this one here. Is it actually higher than that one? Yeah, it is. Yeah, it is higher. So very marginally, but we'll just roll with that. Tiggy. Sorry, guys. That is my African Savannah cat. He's being a little mouthy today. Right? So we get into our next candle here, and we have this low set here, but we see that it's nowhere near as low as our previous candle, so we don't worry about it. Then we have this low set right here. We're not going to know that this is set until this candle actually kind of until it closes. Right? Remember that these are 5-minute candles, right? So we can move that up because it is a higher low. Okay, so we moved up, and we're always constantly looking for a higher low. So we have one here. And at the same time, we don't necessarily have to concern ourselves with lower highs yet, or the higher highs or anything like that. We just are concentrating on our higher lows. Okay, so we have this low point in here that was set, and now we've moved away from our low. We're in kind of an area here where it's like, okay, things have been gathering and collecting in this spot and area. So I'm going to start and really, really pay attention. The institutions were trying to get people to do exactly this because they dragged them all the way down here and then probably ripped that one right back up. It was like 2 a.m. That one was kind of like 2 a.m. ish. Tig, stop. That's enough. Sorry. So here we come back to this, and now we move this forward, and then we have this one up here, and that's going to give us our new higher low. Okay. Now we also, at the same time, we're going to notice that we have it's not, let's just click on this, and we can grab a hold of it and we can move it over here. So we have a high here. Now we have a lower high. So we're never totally sure exactly when our highest low is going to be established. But once you have a lower high, and as you can see here, we got into this high point, but none of these candles ever exhibited a lower high because each candle, as it came down and it kind of rebound, was successively higher. But we had a definitive freaking high set right there on that one there. Then we had our higher low. Then we had this candle come up here. And on the close of this red candle right here, I think I'm going to expand this out a bit so that we can see a little bit better. Once we had the close of this candle right here, that established this one here as our lower high. So now we're going into doing both things where we're looking for a higher low and a lower high. We have a lower high established. So what we want to do is we're going to start and really focus and we're going to watch things. This is this point and stage of where you watch because price is actually in its transition. This is the transitional point for traders to pay attention to. And if you can do that and you can master this simple little thing, you don't need any freaking indicators. I'm not kidding. You do not need any fucking indicators. You don't have to clog your chart up with a whole bunch of stuff that lags so badly because this is exactly time with the markets. Now, the only thing that lags in this concept and idea is the plain and simple fact you must wait until candles close. No data is written in stone until that candle closes. Okay? Just keep that in mind. So we have our higher low, which is pretty much our highest low established to this point. And now we have a lower high. Okay. So we're going to leave this red line in place. And now we're going to watch for lower highs. But we're going to leave that in place until one sets up. So I'm going to go back to my crosshair for a second so that we can start and look at something. Because this is how we're going to do it. I want you to concentrate up and look up here. I'm going to put this over top of candles. So we know that this green one right here is not our high because it's just not as high as the candle on there. But we start looking to our next one. So we have to establish what the high is here. I want you to look up here, this high point here. So we have, you don't really have to worry about all the numbers. I would just select the last 5. So I get 27.425. That's the high on that one. So it's 0.425. This one here, 0.4 or 0.240. So that's actually lower. So that's no good. And then we just go along. Right? And we're dropping off. So how you would make a trade on this is going to be set in once you get a nice full candle body below this price point, below that low. Yes, you're going to still have to have a stop loss, but I would put my stop loss in at this close and open on these two candles right here. So this is where your stop would be, and you can just run this down. Now we've done that trade, and while that trade's in progress, we're looking for a new lower high. So we're coming down, coming down. We're going to leave our low point line sitting up here. And then we've got our highs that we're concentrating on again, because what we want to do is we want to refocus on price shifting back to the upside side now that it has come down. So I'm looking for my lowest high. So I go down, that's not a high, that's not one. And then I stick put this one here. This candle closes. That gives me that high. Now I'm watching my candles here again because it could just take off, right? And is this truly and honestly my price point to get in? Well, I want to sit and I want to wait until I get something that's going to be reasonably prominent, right? Now we notice that we've got a high here in this situation right here, but it's higher than this one. I'm concerned with only the lowest high. So, and we can see that price is shifting. And the one way now we can use this once we've established something down towards the bottom. So we have our lowest low point here, right? Which we're not. It's an establishment of a given price point to gauge our higher lows from. Okay. So we have a lower or a higher low right here. This green is going to stay in place because that is our lowest high to date or at this point in time. And then we have a succession of candles that are a little bit, they're dropping down a bit. But so what I want to do is I want to go back and now I'm going to start and look up here at this low reference point up here with each of these and to see where my price point is. So our low is 7.025 and this is 6.910, which is lower. So 6.910, and then we have this one a green candle, which is an upward moving candle, and it is 6.720, which is lower than the previous candle. So we have a low point established there, and it was kind of in succession, and we were waiting for a candle to be a bit higher on the downside, on the low side. Okay, so here we have this establishment. That's not going to be known until this candle right here closes 5 minutes later. Okay, then that one is written in stone. Is a little bit higher than our previous low. Right. So we move this up. I have this established. I have no other new lower highs because it's just price movement. No true, I should say, no true lower highs. Okay. And price moves up and we can start and think about getting in to a trade in this area here. Right. So when there's $9, $10 move, yeah, 4 o'clock in the morning, EST time. So this is not a great time to be trading, but I'm just using these examples to try and teach you that you can do this. You don't need any indicators. This is a very, very simple way of trading. The sideways movement is where things will get a little bit stickier. Okay, so let's get rid of this for a moment. And then we got, so in any sideways movement, which we can plainly see, but at any given time, sideways movement can take place. It can. I mean, even if you look here, and you just draw a line, let's use our arrow. I think we had a candle sit in here, and then prices kind of move sideways from that point. I mean, this is something that you can add in to doing this. It's just a case of really paying attention. Now, you get the inner circle traders, you got the ICT, you got all kinds of stuff. But those are just so many ways of complicating stuff crazy. And all you have to do with this concept and idea is to gauge when you see price moving down, start looking for your lower highs. So it's that high candle that sticks out. That's what you want to look for. And when price is moving up, you're not in the market yet and you're looking, well, where can I get into the market? You start and point out the higher lows. And as you just follow it along, and you'll get to a point where in this scenario here, right, we're always constantly looking for a higher low. So, and we have one right there. This one dipped down and was a lower low. Not interested. Not interested. Not yet. Right. I do have my lower high, as you can see right here. So we had this high here, and now we have I think, and it would be either one of these because we got a high here. Go back and look up here. We have a high established of 720.52. That is 720.405. So this is definitely our high, which is a lower high. Now we can establish this. There's our lower high. Price bibble bobbles in between these two price points. And none of these record a new low. Each candle lowest point is successively higher. And then all of a sudden now we get into something lower. Do I really want to trade this out? You can. You can. You're just going to have to watch. And while you're sitting in that trade, you're just going to have to watch for your, now the price is descending. You're just going to have to watch your highs. And nothing is given here. So we have a perfectly rounded, I'm looking for my paintbrush. Okay, there we go. So you just have this, oh, that's not going to work quite that well as I thought. Right? It's kind of a wiggly line. Okay, so it wasn't giving you the, wasn't there was no point established by a given candle. Okay. And then we're kind of back here to our low points here. We're trying to establish that high that never comes. Right. So what do you do in that situation? I think I'm going to put that into the next video. I'm going to leave this here as it is. Um, just going to reiterate what we were talking about. So it's established high points are individual candles that set a high. So, and then you're going to look, is this a lower high? And then you just consecutively look for your lower highs. Let me just grab this so I can reinforce this whole concept. And down and down. Is there anyone in here? Is there anyone? Yes, there is. You see that right there. You can see that high right there. There's a high point right there, which is lower than any of the other highs. So you're always looking to establish the lowest high. Okay. Lowest high, highest low. That's the way you just have to think about it in those terms. Can get a little confusing at times, but you just watch. Nothing is setting up in that proper candle formation. We have that one right there, right there. But then we have at the close of this candle, we have this high here. So we're willing to let the price drop and go down while we're looking for its turnaround. Okay. And here the turnaround is established by a higher low system. And then we have these higher lows. You don't have to wait till it gets all the way up here to get in, right? Is there still some risk involved? You bet. You bet there is, because there is no 100% trading. It just doesn't exist. All you do is you try and learn from price movement and those transitional points from price descending to price ascending. There's a transition point there, so that you can put a buy on. And when price is going up, you want the transitional point as close as possible for a sell to sell. And that's all I do. And that's what every trader should try and accomplish. Um, we see the sideways movement, which I refer to. All sideways movement is institutional meat grinder, is basically what I call it, because this is where retail traders just get eaten up of buying, selling, buying, selling, buying, selling, and their account, just diminishes. So by the time that you get around to actually being able to make money on a trade that would have gone in your favor, you placed all this, I'm going to sell, and then, oh man, I'm out, and then I'm going to buy because price is just going to keep going up. And then they just, it's just a back and forth seesaw game. 10x and your account just gets drained. Now we're coming up on the 30-minute mark, and I think, yeah, I'm going to take one closer look here, see if there's anything else I can point out. We do have our sideways movements. You can, if you'll pay attention, to some of these things, you can establish that by just merely, don't worry about the wicks. The wicks are, as I always say, man, are just bullshit. Now I have a video, I think I have to do one still on the wicks. Because once you have a collection of wicks and they'll sit in a box, it always goes up that way. It, a wick point is really, yeah. I don't want to go into that right now, and I shouldn't have mentioned it. Sorry. So anyway, just a quick recap. We're looking for lower highs and higher lows, so that once we get up to a certain point, price is going to drop down below that highest low, and then that's where we sell. And where we buy from is when price is moving down, down. We got this here, and it just sits, right? And just because this high is here, don't change your spot. Leave it at its lowest point because you would want to try and establish another lower to another lower high would establish a point that price is still kind of one, either moving down or two, moving sideways. Okay. And the smaller the difference between one lower high, and we'll just say this was one here. Once it really starts getting small, you know that the market's going to start and probably move in the opposite direction. And that's what we're looking for. I think that is pretty much it. This is current chart. We're currently at 6:04 p.m. Gold market is about to open. It has actually opened, but the first candle for the 5-minute chart has not come through as of yet. Now I do have, oh, sorry, it's right there. So we have a god awful drop here, price. But this is where I had my other two set up here. So I was looking for, I do believe that I had my set it right up there. This is current price right here, right now, right today. So May 10th, 6:04 p.m. Eastern Standard Time. What else do I need? Let me bring this back out. And I think maybe since we've gotten here, I know I was going to end this, but let's just do a little bit of actual real-time price movement. So this here, I've established the highest low. Okay. That is the establishment of the highest low. Right in there. Let's kind of move and zoom in on this a little bit. Okay, put this up over here. And now I have successive lower highs. And we have this one right here. I believe this is our last current lowest high. Okay. And now we have price. I'm going to have to button this up a little bit. Now we have this one, current price, moving well down. So here I'm going to look for another high, lower high than this one, established down in this area here. See if price is going to revert and head back up. Okay, this one's a bit of a long one, but I want people to understand that as price is moving up, don't worry about the highs. That's not point where price is going to cross over and tell you that price is moving in the opposite direction. Okay. Right, price comes down along here and then it moves up. We don't have to go boom, 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 boom. You just go straight up through it and up that way and down. This is a mighty drop off on the opening. Being Sunday night, things do have a tendency to do this. So what I'm going to be looking for tonight is a lower high, and then we'll see if we get into a low point, and then we get into a higher low. So the higher lows will start and establish that prices may be moving in an upward movement. in a trend. And we can actually, let's just see, I can go to a higher time frame. Now this one's a little bit of a busier chart, but this is the 1 hour chart. You can see right here. I do have my lower high, and so this is my lower high from this point down, and there was the highest low established right there in all these candles. That was the highest low, proper low, true low. It must be a true low. I don't necessarily like when you have two candle bottoms that are identical in price. Um, they typically are bounce points, whether they're top side or down or bottom side. It doesn't matter. They typically are bounce points, but you're not going to know it until candle closes, right? Because while it's setting a double top or double bottom, you can't really take effect of it until candle closes. And 9 times out of 10, the majority of the price movement has already taken place, and there's nothing you can really do about it. So this is showing right here, right now. If I just drop down, I can go back to the 5 minute chart, and you can see you're looking at some price rebound. So I'm going to be looking for lows, and I'm also going to look for an established lower high. Okay. All right. So I've run over quite a bit here, time wise. So I'm going to close that up, close this video up, or end this video here, and jump into doing other videos on other tips and tricks and stuff that you should be watching for while you're doing this. You don't necessarily need indicators. It's based on real time price action. Boom. And that's it. All right. So take it easy, and we'll get into the next video shortly. Bye.